Happy Sunday to all. This is PSG. We're going to be going over a little bit of the explanation of Chapter 2 entitled Are Penny Stocks Right for You? I'm going to jump right into it, assuming you've been doing your own reading this week. It's only about 10 to 11 pages. Pretty simple layout. As I always say, I'm not a financial advisor. These are just tips and tools I've learned along the way that might be valuable to you as well. I will start off with saying people do fear penny stocks. They're very highly manipulated and subjected to scam. However, I do feel like a lot of people can't stay away from the OTC simply because it's a land of a much greater return. So you'll see a lot of people with bad things to say about the OTC, but they do know this is where it's pretty hard to find these type of returns, especially the rate of return. What does scare people? It is a higher risk type of thing. That's also at the same time what does attract more investors because there's also a higher reward. You would notice on Twitter when you have some spare time, if you type in the $ and you type in the ticker, you'll see a lot of people on Twitter explaining different things about a stock. Keep in mind, people might say anything to get you to buy their shares, so it's important to only invest in what makes sense to you. Moving along, fact checking. You'll notice over time, there's people that have a track record for being able to provide quality stocks. Look at the chart, look at what they're talking about, go check and see when they're talking about the stock. As you notice, it's a lot easier to point out a stock that's up and moving versus being able to identify a gem at the bottom before it takes off. When you're talking about different ways to put your money in places to diversify, I'm going to talk about a few different options. One, you'll see some people saying, not some people saying, but some people may think, hey, the safest way is to just hide their money under a mattress. No one can get to it and they don't have to worry about losing it, quote unquote. To an extent, that is true, unless the house burns down, but just basic information along the lines of inflation is definitely going to inform you that putting your money in a mattress and just sitting it there, just off of inflation alone, the money won't be able to keep up. I know you've heard of also certificates and bonds. These are low risk vehicles. For me, I'm looking to see my money turn to 500 to 1,000% within the next 3 to 6 months, maybe a year at the most. So bonds and certificates for me, I'm not really interested in putting $200 or $500 into a bond and seeing it turn to maybe $505 or $510 within the next year. To me, that's a long time to have a allotted amount of money locked up for that type of rate of return. But these are low risk, so we do understand why they're also valuable to some investors. Real estate, for its tax advantages alone, is pretty lucrative. However, with real estate, just like with some things in common, timing and location is everything. Demographics on where you are, being able to see the future and the value going up, depending on where you are buying this real estate. Blue chip stocks. Blue chip stocks are considered to be very safe because unlike the OTC world, you don't have to worry about maybe stomaching 20 to 40% price fluctuations. So blue chips are considered safer. However, it does take I would say in my opinion, depending on how you are investing, it does take a lot longer to see the type of returns that you'll see in the OTC. Typically, the phrase takes more money to make more money, I feel like is more valuable or important when investing in blue chip stocks. Your level of patience may take a lot longer than you're expecting, especially if you have a little knowledge of the OTC world. You have your mid-range and small caps. They're considered to be a bit more riskier than blue chip stocks, but also still very safer. So this is also something where you have to know your type of comfortability and what type of stocks you're going to be going after. Options and derivatives, they're extremely risky if you're not familiar with complex hedge strategies. So as always, I would say do your due diligence to find out what part of the market is going to be most suitable for you, tailored to your type of portfolio goals, mid, short, and long term. Coming on back to the OTC world, limited funds is really why a lot of people come to the OTC world. They know that a little bit of money can turn into a whole bunch of money that can really put them in either a different tax bracket or help them to be able to walk away from the job that they supposedly don't like at the time. I will say, if you treat the OTC like a lottery ticket where you're jumping in and out of stocks, you don't understand the process of due diligence and reading charts, then you'll be in and out like the inexperienced gambler in Vegas. I don't care how much money you have. I'll say it 1,000 times, some blue in the face. The market will clean you out if you don't know what you're doing. All right, I'm moving along. I do want to let you all know you're not the first one to jump into penny stocks. So there's a lot of things that you will see, and don't feel alone as far as having similar feelings. I will say we did create the Penny Stocks Guru main group chat to be able to tailor it to investors that really want to learn, and then investors that really want to help others be able to provide sound information that might help them. Moving along around the terms, let's see here. Going along with penny stocks, I will say that if you're looking to make $1 million out of 500, that's not really that realistic, although it can happen. I'll be the first one to tell you, when you're making 100%, 200, 500, 1,000, always have your formula or your trading style of how you're gonna move some shares out, put some on the side for profit, send some money home, put some on the side for taxes. These are things that if you want to be your own full-time investor, you're gonna have to get used to managing these things. If this seems like it's gonna be a lot or too much for you to look at, I will always say, look, go pay an advisor, go pay a consultant to give you some information that can help you identify what type of investor strategy you want to go with. You'll see a lot of people that also are afraid to share certain stories with you. They don't want to tell you how they've lost thousands of dollars buying into stocks that people on Twitter with a lot of followers were pumping. I will always say it, buy what only makes sense to you. The reason being is buying blind is not going to solidify that you're going to just be okay. Don't guess with your money. I always will say be intentional about what you're doing. Also, you're going to see a lot of success stories online. People explaining to you how much money they've made. You don't know what they went through to get there. And you don't know what stocks literally that they may have traded or got in and out of to build that profit. I would say it's always most important to look at your your strategy and your success, because if you get lost in the sauce looking at what everybody else is doing, you will really slow down your growth. And when starting out, growth, putting in that work, it will separate you from everybody. Moving along the lines of, for me, what is an appealing stock? I do feel like appealing stocks will show their value. Transparency is everything to me. I don't need to be guessing if they're going to put out financials on time, if they're going to go through with their merger, the timeline of their LOI, the settlement date. If they're in a lawsuit with a bigger company that might just take a settlement just to get them out of their hair, so to speak. Acquisitions. When you're also seeing an increase in employees, revenue, sales, these are good indicators. More employees mean they have more to put on payroll. These are all things you're going to have to start sifting through in the filings. And also, if you don't see it in the filings, sending some emails to the company, the CEO. Have your list of questions and be ready. Don't just simply ask them or tell them, hey, we need news, the price per share is dropping. Make it make sense. If you're reaching out to them on those type of little and vague questions, you got to understand that these companies, some of them have a lot going on, and to be wasting their time with those type of questions, they might not even respond to you. I'll be honest. Let's see, moving along, not just about quality stocks. This is something I haven't seen really too often in a lot of penny stocks, but the book does tap on along the lines of reoccurring billing, reoccurring billing for our subscriptions. If it's a company that has a platform or a fee that they charge monthly, if the subscriptions are going up, make it make sense. This is also added revenue. Excuse me, to each quarter. So just understand you have to almost be able to see the money before you see the money, if it makes sense. The easier you can get used to identifying the potential in these companies, the easier it will be to turn a little bit of money into a lot with just a little bit of patience and fine tuning. Yes, it's true. Most penny stocks fail and they suck. I say that in the aspect of their low quality. You have to realize that a lot of these penny stocks are just starting. They might not have an order of operations. They may be trying to sell the dream to a bank or creditors. So you have to understand along the timeline of what company you're in, um, what exactly is going on. You can't just be hoping day to day that the stock goes up just because you're in it. I mean, there's so many different things within each company. It's almost foolish to just try to bunch them in. When you have different sectors and share structures, I mean, some might be going into a chapter 11 or chapter 7 bankruptcy. Make sure you know the I think it's 5, my apologies. But make sure you know your difference between the bankruptcies and then also if they're going to be doing reorg plans or wiping out the commons. Commons are the shareholders. We'll tap into bankruptcy stocks in more detail later as we go on in other chapters. I was just briefly tapping into knowing the story behind what companies you're in and their timelines. I will say that be careful. Be careful, be careful, be careful. Social media will make every stock sound like it's going to the moon. Be okay with saying no. There's always the next company. Yes, you will get your few gems that go to the dollars, like your TSNP that turned into Humble and whatnot, but chances are a lot of them don't. So you need to know when to get on the train and when to get off. I will say to you, if you're hearing this stock for days and weeks all over the internet, be okay with missing out and learning on the sidelines. Learning on the sidelines is just fine because you can sleep better learning on the sideline versus your money's in because you bought at the 52-week high because everybody on Twitter was retweeting saying it's going to the moon, 15, 30 cents, 70 cents, a dollar, etc. People will say anything to get you to buy the shares. Don't be the foolish one getting scammed all the time or losing money all the time because you bought at the high. I understand you grow through what you go through. So if you keep going through bad situations, losing money, at some point you got to look in the mirror and take some accountability and say, I need to buy at the bottom or be okay with missing out and learn on the sidelines. Also an option to do if you're not okay with losing money, paper trade. Paper trade is also another way. Jot it down on a notebook and just track all your notes. I will say as detailed as you are, as successful as successful you will be. I know friends and family and acquaintances that have notes of paper, notes of companies' due diligence. They keep it, whether they keep it in their phone, their laptop, or traditional, as I mentioned, notes on a notebook. So don't feel like you can't be as detailed as you want to be. This is literally up to you. And as I mentioned, when just starting out, you want to grow and you want your portfolio to grow, where you need to start learning this stuff versus hoping. Be intentional about your success. Yes, there are people that have to work and do this on the side and micromanage both and outside of their main job, put in those hours at night, whether they're tired or not, to learn these things. Yes, it's important that you do that. Yes, many have walked away from their day job. But if you're thinking that it's going to be a perfect time where you can sit around and study and not have to worry about your job, that almost will never happen. Be realistic with yourself. And then when you're realistic with yourself, make sure your patience is tailored to your patient. Make sure your patience is tailored to make sure your experience is tailored to your patience. The reason I say make sure your experience is tailored to your patience is because you get a lot of people that start out and they just want to make $1 million tomorrow. Realistically, that's not the case, but it could happen. But when you have experience, then you're able to literally sit down and in your mind formulate different timelines of companies depending on what sectors they're in or what they actually have going on. We will dabble into the more details of combing through financials and things of that nature as we get into further chapters. As I did mention, I'm hoping that you all did do your reading and show up prepared today in our group chat, 3 p.m. Central Time. We are going to be answering some questions that are really tailored to Chapter 2. I understand some may be ready to jump ahead, but if you're ready to jump ahead, then go jump ahead. That's fine. But understand with this amount of allotted time, we're only tailoring a lot of our questions and answers to Chapter 2 so that we can literally sharpen our tools. And like I said, I look at this like it's OTC training camp. Show up prepared. I'm sorry, not hypothetically speaking, but figuratively speaking, if you're gonna go to war, you need to have all your tools. So tools in the OTC, most important tool is going to be your mind, being able to tune out noise and make sense of what makes sense to you. People will say all types of things as I've mentioned in the past, but only invest in what makes sense to you. Learning from your mistakes is going to save you a lot of money and make you a lot of money, in my opinion, in the OTC. You'll see people that have been making the same mistakes for years and pointing the finger, pointing the finger, pointing the finger. Accountability goes a long way. And I'll be the first one to say, if you can't tell me it about a stock at the bottom before it takes off, then I for damn sure don't need to know about it when it's up at its 52-week high. Excuse me. And also, understanding just because someone else likes a stock don't mean you have to like it as much. They might have been in 500% lower than what you're getting in. So of course their level of importance is a lot different when they might be up 5 to 6 figures or more versus you're up $100 or $500. As I touched on it earlier, looking at your success and growth is more important than looking at everybody's success stories on Twitter that are telling you how much money they're making. No matter how much money you're making, if you can't manage it, you lose it. Definitely in the market for damn sure. It could be in a day if you're trading foolishly and happen to jump into a stock that turns out that didn't make sense to you. It was popular on Twitter, and look, the company can announce a reverse split after the market closes. I speak on a lot of experiences I went through to hope that some can eliminate a lot of mistakes in a shorter period of time to experience success. And of course, I don't ever mind sharing my tips and tricks that have helped me maneuver through the market, because I do truly feel like the more of us know how to identify quality stocks, the more runners we can find, the more money we can make, the more people we can help. I'll be the first one to say money isn't everything, but it is a vehicle, in my opinion, to better security and a better lifestyle. That lifestyle, the better lifestyle, it'd be up to you to see what type of lifestyle you want for yourself. We all have different ideas of our best life. And before I forget, I don't want to make it seem like you can learn the market and quit your job. There's people that have learned the market and they keep their day job because they like it and it's comfortable for them. So don't ever let me create the illusion of quit your job and love to do this. And last thing I wanted to hit on was just losses, losing money. It hits everybody different. Some people lose sleep for days, months, weeks on that money. In the OTC, you got to be able to adjust, adapt, and move forward. Because if you're sitting around thinking about your previous mistakes, you're going to miss the next opportunity. Opportunity is everything. And I will say, by not quitting and staying in the game, that will guarantee you at least have a chance. So if you have a quitter's mentality to give up, or you can't stomach losing any money, then I will say in the investing world is not for you. Not even just the OTC, the blue chip world, anywhere. It takes money to make money. So when I say that, if you're afraid to take a risk, then it's not for you. There's a lot of quotes that I love and I've had to literally make myself appreciate. And one of them is scared money don't make no money. If you're sitting on the sidelines, worried about jumping in, look, opportunity comes to those who go after it. So I will say that you're going to get in what you put in out of this. And I'm glad that at this point we do have platforms where you can share your experiences and not feel alone. Our group chat is providing a link below. That's definitely a way to do so, where we tune out a lot of the drama and we just present due diligence, quality companies, and people get to ask questions. And I do feel like it's okay with butting heads sometime because we all think differently. As long as you respectfully state your stance, then we can move along. But we don't do the disrespect. This is PSG. See you next week, chapter 3. Hopefully you're doing your reading and growing, because it's up to you. Otherwise, you're just missing out. I'm doing this to hope that we can reach a few, but in reality, look, the group we got assembled in our group chat, we're going to be moving along regardless, but we'd love to have more to eat at the table, to sharpen their tools mentally, to know how to identify good stocks. All right. Well, I hope that you got something out of this. Take care. See you next week.